We're joined today at Active ETFs InFocus by Don Suskind, who is the head of ETF Product Management at PIMCO. PIMCO currently manages more than $200 million in assets within Active ETFs, and is the largest player in the United States Active ETF space. Don, welcome to Active ETFs InFocus, and tell us a little bit about yourself and how PIMCO decided to step into Active ETFs.
Thanks, Ashish. I appreciate you taking the time to talk with me today. Briefly about myself, I've been with PIMCO for about 6 years, and before working on our ETF effort was involved in our Stocks Plus product, which is also an equity product. Mm-hmm. And then I got more involved in our ETF business conceptually several years ago. Your question about how did PIMCO decide to step into Active ETFs, it was pretty natural for us because PIMCO has historically been an active investment manager.
Correct.
And investors access our various active strategies through a range of different vehicle types, including separate accounts, mutual funds, closed-end funds, private funds, other vehicles, and now through ETFs also.
That's right.
So, when active management became possible in the ETF vehicle in early 2008, that's when we took a closer look at the features of the ETF, and we determined that the ETF vehicle contained enduring value propositions relative to mutual funds, such as access to investment managers. So anyone who can buy stocks can buy ETFs and can access any manager that puts their strategy in an ETF. Mm-hmm. Portfolio transparency.
Yep.
Is certainly different in ETFs than in a mutual fund. And, of course, the more equitable tax allocation. And then some investors, many investors may appreciate the ability to trade ETFs throughout the day as well.
Correct. Now, so PIMCO's, at the end of March, PIMCO's products had roughly 62% of all assets managed within the U.S. active ETF space. What do you think has attracted investors to PIMCO's products?
Well, I think it's a combination of a couple things. First of all, many people already believe in PIMCO's capabilities as an active manager, so that belief really helps people get comfortable with the idea of how we could actively manage portfolios in the areas that we're offering active ETFs right now. Mm-hmm. So that leads kind of to the second point, which is that the categories in which we've offered active ETFs, which are municipal bonds and in alternatives to money market funds,
yep.
Those categories are in high demand.
Mm-hmm.
So specifically, cash allocations remain very high. People are looking for ways to increase their returns on cash, but they may not yet have the conviction level to invest, to really move all the way back into risk markets. Mm-hmm. And so, people know that their money market yields are barely above zero, and so any way to enhance that return potential is certainly of interest. And we see a lot of people moving out of money markets into ways that can generate into strategies that can generate a slightly higher yield, but aren't necessarily yet back into the full volatility of the beta market.
Got it. Now, in early March, another big player, Eaton Vance, actually filed to launch 5 actively managed bond ETFs with strategies and even names which are identical to PIMCO's existing products. So how is PIMCO planning to deal with more competition with other large players like Mason, which is also entering the space?
Well, we welcome additional entrants and additional competition, and we stand ready to compete on the basis of PIMCO's investment management process, our portfolio management skill, and ultimately on performance. Mm-hmm. So, the more attention that's drawn to this category, we certainly welcome that.
Okay, that's an interesting viewpoint. So, for the active ETF space as a whole, what do you see being some of the main challenges that the space faces?
I think it's different for different managers. So I mentioned that one of the main reasons that PIMCO, I think, has gotten traction is because people believe in PIMCO's capabilities as an active manager. For a manager that does not have a track record in other strategies or doesn't have the brand recognition, it might be difficult to get momentum until they've established a track record in that particular strategy.
Correct. Okay. Now, I guess another question would be, will we be seeing a total return active ETF from Bill Gross anytime soon?
Well, to that question, my normal answer is never say never. Although, with any product that we put out, it's a combination of a vehicle which contains a strategy, and we begin and end our product development process with the investor experience in mind. And we need to ask what vehicle makes sense for which strategies, and which strategies can we put in different vehicles. And for many of our actively managed strategies that we have in mutual funds, the ability to generate the returns that investors have come to expect in those types of funds may be, it may be to the detriment of those funds to generate, the disclosure required by active ETFs may detract from the fund's ability to generate returns for investors.
Okay.
A different way to say that is that investors in something like the total return fund, for example, may not actually want the portfolio to be disclosed every day because there's a risk that could detract from the return potential of the fund.
I see your point. So given that most of the active ETFs that PIMCO has on the market, there's actually a comparative mutual fund strategy as well, which models the same strategy. So does that result in cannibalization of fund flows from PIMCO's mutual funds?
Shishish, if you look at the funds that we offer in ETFs, at the moment we don't offer any directly comparable mutual fund strategies also.
Okay.
So the guidelines that are drawn up for our ETFs have some very specific differences between what we offer in an ETF vehicle and what we offer in a mutual fund vehicle. So at the moment, we don't have directly comparable strategies in both ETFs and mutual funds. To the extent that we did at some point in the future, if we were to do that, I think that the products could be designed in such a way that we wouldn't expect cannibalization or that we'd be indifferent to whichever choice an investor preferred. And ultimately, we do have a number of strategies now that are offered in multiple vehicles. Some of the strategies we offer in mutual funds, we also offer in separate accounts or in private funds in some instances. So really a different vehicle is the intention of a different vehicle from our perspective is to create access for a different category of investors. It's not necessarily for one investor to move to a vehicle or for one vehicle to take over another. It's just to create access for investors that may have a preference for that vehicle.
Correct, got it. Now, do you see, so far most of the active ETFs have been in the North American market. Do you see there being scope for actively managed ETFs in Asia?
I think so. I think investors based in Asia have many of the same challenges that investors in the U.S. have, especially in the area of cash management. And so to the extent that an ETF provides access to investment management expertise that otherwise is not as readily available, then the ETF vehicle and an actively managed ETF could certainly have appeal to investors based in Asia.
Do you see, do you see market liquidity or regulatory concerns being a bigger hurdle in the Asian markets?
Shishish, I wouldn't say I'm an expert in that category. I think you do have many Asian investors that buy U.S.-listed ETFs directly on U.S. exchanges.
Correct.
So that it doesn't appear to be a hindrance. As far as the other regulatory filters or hurdles, I don't really have a view for you on that at this time.
Okay, that's fine. Well, that's great, Don. Thanks a lot for joining us, and we wish you all the best for the future.
Thank you so much.